Good morning, everyone. Happy Cinco de Mayo and happy Hump Day. Wow, what a big day we have here. Okay, that's kind of funny. I don't know. Still makes me laugh. Let's take a look here at the future. So I was talking with someone in the room last night, and they were talking about how unstable they felt the market was. And I was looking at it, and it's hard because, and I asked why, and because it goes up and down, or because it's been going up and down. And we have had a lot of that, um, kind of chart. Like we'll get the move, and then we fade away, or we flatline during the day. So I'm not so sure it's so much as choppy. It's just hard to trade when you're not getting, those bigger swings. And we kind of got used to that over the last few years that you could get moved on a tweet, and there's a lot more volatility built into the market. But the overall trend was really clearly still up. Now, when we look at the ES, this is the S&P Mini Futures, and the reason I have this up, I want you to take a look at this. Can anybody argue that even though we're at a bit of a point where we're taking a rest, we're at, walking up the stairs, we've hit a landing, walking across for a little bit, does it mean we're going to continue walking up? No, absolutely not. I don't know. I can't read the future. My magic 8 ball isn't working for me correctly. So, but I can tell you this: this is not to be unexpected. We've had this before, right? So this pre-COVID, we walked up, took a break, walk up, took a break, walk up, took a break, walked up, jumped out the window, right? And this is when everything shut down. And then what did we do? We turned that right back around and we rallied, right? We came up, we took these little breaks. This is a weekly calendar, so each candle represents one whole week. We had here 1, 2, 3, 4 weeks where we took a break, and what did we do? Turned right back around, right? So the fact that we're up here and we have hit these highs, we have smacked these highs across the indexes, the Q's lagging, whereas before they were leading. Look at this. We are right up above here, and we are now putting in a landing. Does it mean we keep going up? Maybe. Does it mean we fall down? Maybe. But we don't know, and there's no reason to anticipate it until it happens. So participate. Don't anticipate. I'm going to say that first. And simply because trading's a little bit harder doesn't mean that the market is failing. And I think that constant worry and overlay that we put on the market, like, oh my gosh, it's really unstable, that makes us trade more anxiously, which are usually poorer trades, and we don't need to do that. You have to look at what's actually happening. Is it that bad? Are certain names getting hit harder? Absolutely. Maybe some certain sectors, the tech sector, we can certainly argue, is getting a spanking. But that is okay. We have sector rotations. We come and we go. Energy was doing very poorly, and now energy is doing well. We can look at financial sectors, even with Yellen's comments yesterday about the need to raise interest rates at some point. Well, sure, we're going to have to. And the fact that the market kind of knee-jerks, like, oh my God, we have to raise interest rates, that's kind of a good thing. That means that the market is healthy. We can raise those interest rates. Even a small amount of inflation is actually very good and very healthy for the market, even though these words that we use, they very much scare us. Now, remember, there's a lot that has changed over the past year, and we have to keep in mind we're coming out of this pandemic. Really, the market through the pandemic did wonderfully, and now that we're opening up, and most states are actually quite a bit more open. We could travel. The vaccine is being spread far and wide. It gives people the confidence to get back out there. They're spending, we had record savings during the pandemic. And now people can actually get out there and be like, oh, I'm going to take that vacation. I'm going to spend on whatever it is. Retail has been doing well because we're able to get back out there, and well, let's face it, most people, if you have money in your pocket, it's just burning a hole, so you might as well go spend it. All right, so overall, my thought on the market is I look at this, and if this were any other chart, not a market breadth chart, I would look at this and be like, oh, hey, check this out. We tapped the 20, we played with the 20 a little bit, and then we kept moving away. We kind of got extended here, right? We pulled those moving averages, those bands apart, and what did we do? We brought them back. What happened? Yesterday, beautiful close, even though red day, beautiful close. We have this nice long tail. We pushed ourselves right back up over that 20 today, using the 20 and pushing up. I see nothing wrong, nothing failing, and nothing unstable in this market. To me, this looks like a very orderly market, and I'm happy with it. This also allowed us to set up some new trades for swings, give us some better prices. A few that we looked at yesterday afternoon. I'm just going to pop over and look at these. STX post earnings, big boom up, and along with all the tech, we got it got spanked as well. Came back down, but look at how we pushed this one, or this one got pushed back up. I like this look here for a a reversal, and this had a lot of call action, so I really like the look here in STX. Now, the ones that I see are the 618, so the June 18th 90. Now, if you're going to look at that pre-market, you're going to say, wow, that is really just not enough open interest. Keep an eye on it, though. I think it'll start building, and it had a lot of calls out for longer, out of the money calls, so I would prefer to stay closer to the money, bring it in a little bit, but watch for volume to build on those 90s. So 618.90s for STX needs to be through yesterday's close for that. Needs another one. NE had some great call activity yesterday. Look at all of this volume sitting here. We closed just above the 50. Now we do have the 3 below the 8 below the 20, but playing this on a reversal, there's a smidge of a gap in there. I like this one as well, as long as it opens above the 20 for a move to the top side. On NE, I'm looking at the 618.80s. Now, industrials have done very well. We've talked about X quite a few times, and look at this breakout period. A pure breakout play, probably more of a day trade, unless it closes top end of the candle. But take a look at this. We do have, see, that looks like we were just, breaking out into something we've never been in before, but look at where it is in the chart. I believe if we break out here, as long as we hold top end of the candle, because we can continue to test this, if you look back, there's a lot of room there to continue on, right? Look at where it used to be. So kind of finishing out this great big bowl that we have here. I wouldn't, it's too choppy to call it like a cup and handle or anything like that, but coming right back up, I think that there's some really good room here once we break out of that, probably maybe even all the way up to about 3180. Yep, 3180. So there's lots of room there. That's the weekly candle or weekly chart there. So keep an eye on X. Looking at the 30s, 618.30s. Another one that we've talked about a lot, AA. Watch for this one for a breakout. FCX, pretty choppy, but look at this pattern as we continue to just make some new highs, or new higher lows, right? Higher lows, higher highs. It's in a pretty decent channel here, so watching FCX. Now, when you look at some of the others, precious metals, golds, these have been super, super choppy and not a clear upward pattern. So I'm staying away from gold and silver here, but the copper, so Freeport McMurrin is copper and gold. They are just doing really well, and look at that volume there. So also take a look at some other names that might give us nice reversal today in the tech sector. Particularly, I'm going to watch Apple. Look at this big downward push yesterday. Built some volume on that. Hit that 50. Said nope. Started working its way back up. This morning it's sitting at 128.84. I will likely add some equity to my portfolio here. Kind of was hoping to grab it down here a little bit further, but we'll gladly grab it as long as it's below 130. And also looking for a trade in calls on that. All right, financials, real quick. I got an XLE the other day. That one's continuing on. It'll be right up over that trend line. I have not set it in a sell yet. So please put your sells in where you are comfortable with it. XLF, look at this trend line that we have here. We came right up and hit it yesterday, looking for a move on the top side of this. Have not put in a sell on this one yet either, but financials have done really well. Take a look at those names. If you're not in XLF, watch the names like JPM, Citibank, although Citibank a little bit more quiet. Wells Fargo, beautiful in Wells Fargo. Bank of America, all of these. Look at these. Now remember, don't get too heavy in any one area. And that's why I went with XLF. I just really like XLF is the basket of financials. And it moved up a little bit after Yellen said that they may raise some interest rates because banks get to make more money. All right. That is it for me this morning. I will be out first thing in the morning, and then I will be back. But I will be out for the open. I look forward to seeing you in the trade room.